Hey guys, welcome back to T2SMC Trader. So in this video, I would love to show you how to trade the FOMC day. In FOMC day, the morning session is always the low probable area to trade, where most of the time it's gonna be the consolidation or the seek and destroy mode. Even if it is good price action, please don't try to trade in the morning session. And I will show you how to trade the PM session and why the PM session is much more easier to trade. Okay, so right now the time is 1:53. You can see over here 13:53. After 7 minutes the FOMC is going to start, so I would love to wait until 2 p.m. so that the news candle will release. After that I will wait for the entry opportunity. In the meantime, if you are with me in our Discord, you can see that I have already given this screenshot around what time is up? 12:38. So I showed you this screenshot and I told that study this. Okay, so everyone studied this. I would love to talk about this area in my live chart here, and then I will wait for the setup to show you how to trade. In the meantime, maybe I'll just wait for the setup and then I will show you the entry. So let's go to the area what I have showed in my Discord group. What is that area? Okay. So in 15-minute chart, if you come to this 15-minute chart, here this is that relatively equal highs, which is my buy side liquidity. This is the last fair value gap from 15-minute chart. Market is, you see, it is actually holding. This last fair value gap is holding the market. The lowest down close body close candle is the order block. So when market has traded this order block here around this area, I marked open, but the actually order block is to the top of this candle. Okay, so let me actually make it a little bigger. You see this top here, this is actually the order block. I love to mark the open because that is the most sensitive line. You can see here, after trading this order block, market went higher. So this is that area. You see, I want to see this will be unfilled. Now if market fill this area, fail to take this low, then I will start to look for my breaker block. As you can see here, when this run happened, it came exactly until the min threshold of that order block. Okay, that was the order block open, and this is the min threshold. How beautifully body closed around the min threshold, as well as the 15-minute last fair value gap 50%. Why the 50%? Low rejection, 50% rejection, and then finally the top rejection. I'm not interested to talk over there, but that fall that has filled that unfilled gap, traded the min threshold, failed to take that low, then made the breaker block. Now I'm going to remove this here and look over there. Low, high, lower low. The highest up close body close candle is gonna be your breaker block. So actually the breaker block is from there to there. Okay, here this is the breaker block, but I would love to mark it from here to here, which is more logical to me. This highest up close or consecutive order block, consecutive up close body close candle is my breaker block. Then market came here, come back again to this breaker block, where I'm going to think this market is going for this buy side liquidity. So all my plan is, until market is above this breaker block, I will plan to look for the buy until this buy side liquidity. Below that buy side liquidity, I have some other buy side liquidity. You can see here, this high has been taken here with a shallow run, which is also an buy side liquidity. So I would love to mark that buy side liquidity as well, and I will try to close maximum portion of my contract around this buy side liquidity level. Okay, so over here from 15-minute chart, if you had any confusion after seeing that screenshot in our Discord group, which I keep doing here, if you have any confusion, I believe that the confusion is gone. Now I will wait for the setup from 1-minute chart. I will wait for the setup after 2 p.m. Until then, until I don't find the setup, I'll just keep quiet. Okay, then when I'll see the setup, I'll take the entry and I'll explain that area. Here is the news. That means 2 p.m. FOMC news. After this candle close, I will start to look for an opportunity obviously that will be buy. So let's wait until that buying opportunity. When I'll get that buying opportunity, I will explain the price action again. This area, you can see a displacement over here. After seeing this displacement, of course, I'm thinking about a buy. I can I take an entry over here. Now the problem is here I didn't have any market structure shift, and here this is the entry gap, the last fair value gap to that 1 minute leg. This 1 minute leg has taken all of the sell side liquidity has been taken over here. After taking all of this liquidity, this is the leg that has taken all of this relatively equal highs. So buy side liquidity has taken over there, and this area is unfilled, so it's an unfinished business. Now if I would love to take and buy from here, it's absolutely a low probability, so I will not take the entry from here. I would love to see if it can do one more time the manipulation, come either this entry fair value gap or the last fair value gap, as well as 15-minute breaker block, order block, min threshold until this area. If it can come here, and then if it can provide me any buying opportunity. So I will wait for a setup here uh, to take my entry opportunity. Okay, so I will keep waiting around this area, not going to take any entry over here. If it make another market structure shift after reacting from this fair value gap, if it give me another market structure shift with fair value gap before reaching to this area, yes, I will take that buy. But from this area, I'm not going to take any kind of buying opportunity. Okay, so I would love to see this market will react from there, come until this area, then it will go higher. So let's wait. Remember here, I'm not starting to look for any kind of selling opportunity, because I believe that this market will come here and it will take this buy side liquidity, and finally it will take that buy side liquidity. So I'm just not interested to frame any sell. But here, as I told you, I'm interested to see if this order block can hold the market and send it lower at least until this area first, to look for any buying opportunity. Instead of that, if it give me any kind of market structure shift with a fair value gap by body close above this min threshold, I'll go for that buy before taking this low and reaching over here. So if it give me the market structure shift with a fair value gap even before taking this low, I will try to take that buy. Otherwise, I will love to wait until this market reach here, then I'll frame a buying opportunity. Okay, now as you can see, this market has given me a perfect market structure shift over there, where I got the market structure shift over here even before taking this low. I'm okay with that. Now I will start to look for a buying opportunity from this entry fair value gap. At the same time, the order block min threshold has been broken. If this market come back again to this fair value gap, I will take my buy from this fair value gap. So here, let me mark the fair value gap over here. This is my fair value gap. I would love to take the buy from this fair value gap. If this market come to this fair value gap, I'll take the buy. Stop loss is gonna be below this low here, below that low, and target will be this buy side liquidity. In the meantime, I'll try to take a partial. So here from this gap, I'll try to take and buy, create a limit order. plus 2. So let's wait and let me actually put it over there. Let's see. Here I have the entry fair value gap. Okay, so around this area I have the entry fair value gap and I have the last fair value gap over here. I will try a buy here. After making this entry fair value gap, I will try to take a buy here by putting my stop loss below the 50% of this entry fair value gap. So this buy will be here. If it doesn't come here, I don't want to miss this run. I would love to take the buy from this gap by putting my stop loss below the 50% of this fair value gap. If I get lost, then I will take this buy when market will come here. So stop loss will be there, just 12 handle risk for 21 handle profit from the entry gap, because I can't take my buy here and put my stop loss below this breakaway gap. As you can see, it's too far, 32 handle. I don't want to take that risk, so I'll take a 12 handle risk over there. Let me put a limit order over there as well, which is be there. So if it come to this entry gap as well, I will take the buy from that area. If it works, perfect. If it doesn't work and I get stopped out here, I will wait to market reach here to this area to take re-entry around this area, because this is the entry gap, this is the last fair value gap or the breakaway gap. As market has built two gap after the market structure shift, it has built two gap. Here, this is the breakaway gap. But brother, you are late. You should take the entry over here. I would go for this trade if there was a market structure shift. As there was no market structure shift, I didn't take the entry from here. Now, am I chasing the price? No, I'm not chasing the price, because this is the market structure shift. And after the market structure shift, I have this fair value gap. I have this fair value gap, two fair value gap. I have the buy side liquidity here and the buy side liquidity. Okay, so I am in the trade now. And let me actually put the target here. And this one will be there. I will take a partial here around this area and I will hold my trade until this area, because I took the entry from there. If I could take the entry here, then I would take the partial there. I would close my trade over there. Okay. So let me put a partial limit there. This is going to be the partial where I'm going to take the entry from the entry fair value gap. My stop loss is below the 50% of this entry fair value gap. Because of the stop loss, I am not able to put it over there. So I will keep this entry open over here. If it give me that partial, I'll close this limit entry from my chart. I will close it. But without giving me this partial, if it stop me out, then I'll try to take that entry from there, from this breakaway gap. Will put my stop loss below this area. It is not FOMO. Okay, it's not FOMO. Why? Because this is logical to take the entry from the entry fair value gap. It is absolutely logical. But as the stop loss is going to be too big, that is why I'm taking two tries over there. One from the entry gap, another, if I get stopped out, I will try to take entry from the breakaway gap. This sell limit will be there to this buy side liquidity, which is going to be 21 handle partial. Okay, from this entry gap to until this area is 21 handle. That will be my first partial, 21 handle first partial, and then I will hold my trade until this area, which is the extreme liquidity. If I could take my entry from there, from this gap, I would take the partial here. I would close my trade over there. That would be enough for me. I didn't need to go for that extreme liquidity. But as I took my entry from this entry gap, so I will take the partial over here and I will hold my trade until this area by putting my stop loss to the break even. You can think that market has taken all of this buy side liquidity. Now market will go for the sell side liquidity. No, sir. Your liquidity level is here and here until this any of them are not taken, this market should not keep falling for the sell side liquidity or anything else over here. It should not keep falling. It should keep going higher until any of this liquidity, either this one or that one. That is why I put my partial over there. This is how you will trade the FOMC. Look at the PM session, how beautiful the price action is. In the morning session, how difficult it was to read. But in the PM session, how easy to read this price action. It's too easy, too precise, too beautiful. That is why in the FOMC day, don't trade in the morning session. Wait for the PM session, go for the perfect trade. Market will make the liquidity or setup for the PM session. Okay. So keep watching to see if it can take that partial level, and then we'll hold my trade until this area. So if I take the partial, I'll close this entry limit. That limit order, I'll close it. Everything is just in front of you. You are seeing everything I'm doing here. This is how I trade, and there's nothing like, you don't need to worry about this market. It's too precise. All you have to do is to wait for the perfect time. Did I miss this trade? No. Yeah, I could take that entry. Again, I'm gonna repeat this one more time. I could take that entry if I had the market structure shift over there. I would go for the trade from there. Only buy. Remember what did I say? I'm only interested to take the buy. No sell is valid to me. But as there was no market structure shift, I wanted to see it will come here, then it will make the setup. It didn't do it, no worries. Still, I have the market structure shift with entry fair value gap and the breakaway gap. As the entry fair value gap is here, I put my stop loss just below the 50% of this entry fair value gap. Okay, and I still kept that buy limit over here, because if really it wanted to come here to this breakaway gap, I'll take re-entry over there to this breakaway gap. Now you don't need to take the partial over here. It is 20 handle, 21 handle. Okay, 21 handle 2T. It's 21 handle 2T. Just closed over the trade over there. You are already profitable. 20 handle is more than enough for being profitable. You don't need to hold your trade for the extreme liquidity, but I'm showing you how to hold the market or the trade after taking the partial. That is why I put the limit, sell limit here or the partial here, and going to hold my trade until this area. Keep watching and keep learning. Can it reverse from here? No, sir. It is your liquidity. Look over there. This liquidity is too clean over here. All of this liquidity or all of this area should be taken first. Then if market would love to fall, it can fall, or whatever it wants to do, it can do. But first it has to reach over here. Why market is reacting over there? Because this is the last parabolic gap from 1 minute chart. So it is actually reacting from this area because of the last parabolic gap. Let me show you the last parabolic gap, so it will be easier for you to see the reaction from the last parabolic gap. Always remember, the last parabolic gap has the power to give you some kind of reaction. See this last variable gap, the reaction from this last variable gap. It is just reacting from this last variable gap. No need to worry about that. It will give the reaction to think that this is a bearish market, but actually it is not the bearish market. Look at my stop loss, it's still over there. I didn't move my stop loss at all because this reaction can send the market to take some liquidity. So here this low is the only liquidity I have, so it can come back again to take this liquidity before going higher. That is why my stop loss is still over there. When the market will close above this last variable gap, I'll put my stop loss to the break even. This buy limit will be there because if I get stopped out here, I will take re-entry from this buy area. So it has taken this low, as you can see here. This low has been taken, which is the liquidity. Okay, liquidity has been taken. It has taken that liquidity, trade the 50% of this entry fair value gap. Perfect. Now I would love to see it will keep going higher again. Again, my entry limit will be here. If I get stopped out here, which is because of my tight stop loss, I will get just 12 handle loss. And then I will take re-entry when it will tap to this breakaway gap. I don't want to see that it will come to this breakaway gap, because according to the price, it can come back again from the last fair value gap to take the liquidity, and it should react the 50% of this entry fair value gap. This is called precision. And from the 2nd February of 2025, this precision is working so beautifully it is working. This time when market will close above this gap will be my perfect inverse gap, and you will see how beautifully it will work as an inverse gap. So if I would love to add more, I will add over here from this gap. When the candle will close above this gap, I will add more over here. Yeah, I put I put my stop loss little below of this 50% of this area, because sometimes wick went little more lower. Okay, wick did the damage, so I have to be careful about the wick. So when the wick didn't came below this 50%, I'm really so happy to see that wick is reacting from the 50%. This is why this is called precision. Keep watching. The next body will close above that candle. It's gonna be my perfect order block. The very next candle will close above that line. It will make this candle as my perfect order block. This whole reaction is because of this last fair value gap from 1 minute chart. It sent the market lower to take that low. Liquidity taken. Okay. After taking the liquidity, reacting from this 50%, it will keep going higher at least until this buy side liquidity one more time. Then it will fall or not, we'll see that. If it can reach until this liquidity or not, we'll see that. But right now that is called reaction. So if you are my member, YouTube member, in my YouTube channel, in the members only live, you will see there is a video or live which is where I explained reaction versus reversal. So please watch that video. It will help you to understand the reaction and the reversal. Now, first of all, I would love to see a body close above the 50% of this gap. That is the first sign that this is a bullish market. And then obviously I would love to see a body close above this order block line. This will make a perfect order block over here, and I will put my stop loss below the order block then. So I will trail my stop loss until this area when it will be a valid order block. You saw that in the morning session how I was struggling to read the price, but in the PM session how I am confident about my bias or about my entries. So this is why I keep saying that in the FOMC day, the morning session is always the low probable area to trade. No need to force the market over there. Wait for the PM session, wait for the perfect setup, go for the perfect trade. That's all. This is that midnight open over here. I would love to see this midnight open will work as a support now. Okay, there is a line which is actually the midnight open. I would love to see this midnight open will work as a support. That's I would love to see. If it doesn't, then it's okay. So if the body doesn't close below this line, I will be very happy to see that. Here, there is the midnight open. If the body doesn't close below this line, I'll be very happy that market is not closing. Market is supporting the midnight open. Okay, now is the time to get the speed. It should be speed over there now toward that buy side liquidity. I need the speed now because all the job is done. There is no job left here. I need speed, very speed right now. Now you can ask me why right now you are asking for the speed. Look at the time, 2:31. So this is 2:30 candle which has given me some kind of reaction. Now this is 2:31. It should be toward the liquidity. It should go toward the liquidity now with speed. Remember what did I say? I would love to see a body close above the 50% of this gap. Now nobody has closed above the 50%. That is why it came one more time lower to trade that midnight open. Now it should go and close above this area and also give me another market structure shift here to give me another entry opportunity. So whoever missed the entry over here around this area, they will get another opportunity here to take the buy around this area. They will get another opportunity to take the buy over there. Keep watching. I will keep this buy limit open over here. If it is not going toward that buy side liquidity, instead of that, it would love to trade this breakaway gap before going higher. So I will get stopped out. I will take re-entry over there. So I don't want to miss this trade until this is not taken. This buy side liquidity will be there, or this limit order will be here. I need the speed. I didn't get the speed, so I need the speed now. If I don't get the speed, I will get low probability. This will be the low probability. If I don't get the speed, that will close above this gap as well as above this order block. If there is no speed, this whole trade will be a low probability. This small candle is not enough. I need more speed. This small candle is not enough. Like one candle will go through this fair value gap and it will close above this fair value gap. Okay, that is convincing. But like this type of Mickey Mouse move, no, it's not enough. It's gonna make this whole trade is a low probability. Look at this midnight open reaction. How beautifully it is reacting from this midnight open. I need a candle like this type of candle. I need this type of candle. If this is a precise market, I will get a big candle. If it is not a precise market, I will not get that type of candle. But if it is a precise candle, precise market, you will see how beautifully it will go toward that buy side liquidity. Just buy, something like that. So far it is good to see that market has closed above this fair value gap. I'm really convinced, so I will put my stop loss right now below this order block. Okay, so here I will minimize my stop loss from 12 handle to until 8 handle 3 tick. Okay, now I told that I will add more over there, but I am really not interested to add more. But here you got another market structure shift. This fair value gap is the best area to add more. I'm not going to add. Okay, if it come here, I would add more here, but I'm not going to do that. Look at the speed. See this candle? I was talking about this. I need that speed. Guys, this is for your learning. So focus over here what I'm showing you. Just focus over here. If this candle doesn't close above this last fair value gap, it is much more low probability. So if it doesn't close above this fair value gap, I'll put my stop loss to the break even. If it close above this fair value gap, I'm not going to move my stop loss. As you can see, it didn't close above this fair value gap, so I will put my stop loss to the break even. I know it is little tight stop loss, but I will do that because this is still holding. I don't want to see this will hold the market. I would love to see market will go through this last fair value gap and it will take that liquidity. I don't want to take that risk anymore because the last fair value gap reaction is done over there. It doesn't need to give me any kind of reaction. Even if it wants to give me the reaction, it can come back at least, I mean, maximum until this order block or the 50% of this order block. But in this type of situation, I have to take that risk because now I have 3 PDRA. 1, 2, the min threshold or the 50% of this order block. So 3 PDRA I have. So my stop loss should be safe over there. As this is reacting, so I am going to put the stop loss to the break even. If it was not reacting, my stop loss would be just below that order block. So far, it has provided you 16 handle, not enough, right? Look, the body didn't close above this last fair value gap. Body has to close. So I am not convinced yet. This is not broken yet. It has opened there, but body didn't close. So still, it has probability to come back again to trade this order block as well as the min threshold of this order block. I don't want to take the risk anymore. That's why I put my stop loss to the break even. Now let's see if it can give me the partial first. So the partial is until this area. Now I will remove this limit order. I'll just close it because it should take that liquidity now. So here 22 handle partial, and then I will look for this buy side liquidity. I know guys, this is gonna be a little long video, but as I'm explaining the price action according to the live market, I'm so sorry for that. Okay. My dog is barking, so sorry for that noise. Clean highs. I don't like clean highs. Here, see clean highs. I don't like them. Finally, body has closed above this last fair value gap. So this is a bullish market now confirmed. It's a bullish market. Of course, it can fall until this order block one more time, but the bullish market is confirmed already. Remember what did I say? Here, after the market structure shift, fair value gap, if it can make a fair value gap, that is gonna be your re-entry opportunity. So the people who miss the trade or entry over here around this area, this is the area for them to take their entry, and this is gonna be their target from there. Okay, I'm just not adding anymore. I'm showing you from the very beginning of the FOMC to until the end. So rest is your choice. If you would love to really, learn from here, congratulations, brother. But if you are going to skip this, I have no word to say you. No word to say you. By the way, after taking the partial, I will close the trade, and at the end you will come back and you will see if this is taken or not. So remember that line 22319.75. That will be my target by trailing the stop loss. If it can reach until this area, I will share my screenshot to my Twitter or the Discord. Okay? It is done. This buy sell liquidity is taken. So it will fall now? No, sir. Buy sell liquidity is here. Look at this line. That is the buy sell liquidity. That should be taken. Even I'll put it little above. Okay, just a bit above of this area. So it will be until this area. 22.50. There you go. See this boom? There you go. This is called trading, man. Now I will put my stop loss here. Just put it over there, and I will try to hold my trade until this buy sell liquidity. Later you will come and check if it reaches over here or not. If it reaches over here, don't forget to write down me that boom. So this is how you will trade the FOMC. I believe that you have learned a lot from here. This is how I read the price action. This is how the precision market or the precise market work. I believe that you guys got something, and if any of you make this video until now, please don't forget to write down boom in the comment box. So until the next time, cheers guys.